Hi, and welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and special thanks to all the Excel gurus who sent out some help and they got some extra data on the screen for you just because of them. 50-day moving average, colors on my screen is green, 100-day is blue, 200-day is tan. Price versus momentum. Price is general direction. Prices are headed. Momentum is ready to change. A bullish indicator for both is positive and bearish indicator for both is negative. Momentum often but not always leads price. Attempts to determine technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break, or resistance where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time and trade, and provide direction in the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's get right into it. So we've got the now new and improved 1 and 12 month. They're not new and improved. We just have them here. You can see them for a change. So on the S&P 500, annual momentum is just showing a little bearish signal there on the ultra and short term. Not much to get excited about in terms of that. But how about from a technical perspective? When you start pulling in the volume profile, you can see there's some buildup here of overhead resistance. This price is oscillating right in between this kind of heavy zone of trading volume here. The major low zone of support on SPY is going to be between 387 and say 393, right in that range. If you're drawing on your charts, you can put some lines very similar to where I've got, and you can see this volume profile up here, and then you've got another layer of support. I mean, it would really have to break through this this 387 level to get down to say 371. But that's what the SPY looks like. Let's take a look at the NASDAQ, and it's exactly the same picture here. So let's go and see what the NASDAQ looks like. The Qs. And we see a very similar picture here. Price is kind of running right up into this level of resistance. And there's right underneath, you can see if we move this line or copy this line, duplicate is the word we're looking for. You can see there's kind of a buildup here of support. It's trying to build a zone of support here to go higher. If that does not hold, well, you can see the major level of trading volume has now moved down a bit. And so there's lots of trading volume down here. This would be a major level of support. This would be a minor, so major level, sorry, I should give you the numbers, are going to be at 312 and a minor level of support here at 324. And you can see it's kind of moved. See how price moves quickly between these, so you can kind of get the picture that if this breaks down over here, the most likely path of resistance is down to 312. It could very well firm up at 324, but the major level resistance down here at 312. So let's go on to small caps. A little different picture in the small caps. You see one month momentum is yellow or gold here. That means it's negative and rising. The 1 month can move all around. It's not that key of an indicator. But what do we have? Price, ultra short term is bearish. Intermediate term is now bearish. And short term is back bullish. But what's more interesting about IWM is not all of that. But the fact is it looks like it's building a topping pattern here. And you can see all of this trading volume here where this red bar is at. This is, over the last 12 months, this is a point of heaviest trading volume is right in here. It's starting to look like this trading volume above, say, 222 is sellers. So every time you see buyers down here and say the 216 to 211, but there's sellers definitely up here, and you're starting to get a picture of what is looking like a topping pattern. And this is where prices go up and run into sellers, go up and run into sellers, go up and run into sellers. Remember, small caps lead the large caps. So the fact that we're seeing a topping pattern here in IWM is not a bullish indicator for the SPY or the Qs. Let's go on to energy sector, unchanged between price and annual momentum. 1 month momentum is negative and rising. Let's take a look at XLE, and we'll do a bonus look at crude. And this is interesting. It never got to the point where I thought it might and ran into sellers, but now look, it's below its 50-day moving average. That's not a positive sign. It's coming down into a zone of low volume. There's heavy volume right here at, say, 48, 49, telling you that up here there's been sellers. So this starts taking on what appears to be a topping pattern, giving us a picture that the next destination for XLE should be around its 100-day moving average, or right around, say, $45 a share, right? Kind of right in there, where we've seen that gap up overnight move, and we've seen this act as a former level of resistance, which is now support. So that is the direction for XLE. Now, do we see a different view on crude, or do we see something similar? Well, what we see with crude is there's been buyers down here at this 58.59 and sellers right up here in 62.63. It's flirting with this 50-day moving average. There's a massive amount of trading volume right there at $60.30 a barrel. It looks toppish. XLE is telling us that this is headed lower. So if crude heads lower, where is the major level of support? $52 to $54 a barrel. Otherwise, we'll see how this kind of plays out next week. All right, on to financials. No big change here. And remember, financials tend to, or do trade inverse Treasury bonds, not exactly. And why is that? Because the belief is that banks are going to make more money on higher interest rates. The problem is, as we check out on the Friday macro show, well, a lot of money is going to debt pay down. That is not bullish for interest rates. So what do we have up here? Some heavy trading volume on XLF, suggesting that there are definitely sellers up in this area, and there's buyers right beneath. So bullish, bearish, too early to call. The tagged as 50-day moving average and is rising. Bonds tell us a little bit different story. We'll get to that in a little bit. How about utilities? This was once almost all red. Now it's all green across the board. Let's take a look at the utilities. Where's XLU? There it is. And it just shot right through that former area of resistance and is at a new area, hit a new area of resistance at, say, 68, and is looking like it's heading back down to check in with support at 65. People were not interested in utilities and all of a sudden overly interested in them. Kind of wild how that change in sentiment over a very short period of time. Industrial stocks, we already looked at the SPY and QQQ. Similar picture here. Momentum is clear across the boards. Let's go on to gold miners. Now, gold miners is kind of interesting because price has gone bullish across the board. Momentum has not shifted at all. But look down here at the bottom. 1 and 3 month are green. That means they're positive and rising. That is good. 6 month, I'd really like to see 6 month here turn green. But this is positive though. It is negative and rising. 9 month and 9 month can go all over the board. So it's negative and falling. But the 12 month is positive and rising. So you see that there's a lot of good signs here that say, hey, okay, perhaps that was the bottom in GDX, and we do see GDX linked up, back up with bonds. So bonds are rising as GDX is rising, and it's gotten stuck right at this kind of heavy zone of trading volume right here around 36, where we continue to see sellers show up. But is this really telling us the entire story? Well, sometimes you have to zoom out, and when taken in perspective, it still looks like a topping pattern. Now, if you just cut the end of this off, well, it looks like you got a double bottom here and it went up, and close to a double bottom here, unless this is where it peaks and rolls back over. And I think when we look at gold, you see that picture that this isn't over yet for GDX. Maybe this is the bottom, but you got to take in context the bigger structure here. The picture is a little different when you look at gold. How about emerging markets? This thing was super bullish on China alone. And you look at the picture here, short term, you look at price, almost bullish across the board, momentum, almost bullish across the board, and bottom, almost green across the board. A lot to like there. Let's see what's going on with EM. And remember, this is going to be sensitive to the dollar too. Now, a lot of trading volume on EM around at 54. A ton of it right here at 54. You can see that, suggesting that what's going on above right around 54 here is mostly people selling. Still looks toppish. It's run into this zone of resistance right up here at 54 before, or almost 55. So can it pop back up here to say almost 56 and run and still be a topping pattern? It can. I mean, look at the 50-day moving average. It broke the 50-day, and now it's trying to get back over it. And we can see this thing will bounce around. You know, it doesn't have to tag it perfectly. It can be under and come back up. But here we see it's trying to get back over. But look at the 50 days rolling over. And it's getting squeezed between the 100 days. So it still looks toppish to me until we have something else to say otherwise. The dollar's helping. You know, we're going to look at the dollar. High yield bonds, changing the order. We used to do TLT first. Now we'll do HYG. We've got a little bit of a bearish picture on the ultra short term, not a big deal. Intermediate term on price, flip bearish. So we got a kind of even mixed bag. 3-month momentum is negative and rising. I mean, no major red flags on HYG. Looking at that, let's see what the volume says. And the volume's been saying what it's been saying, which is, hey, at this 87 price level, right in here between 87 and 87, say 50, there's people been selling. A lot of people are selling right in here. So there are people unloading their junk bonds onto anyone who will happily take it. So from the momentum says, hey, everything's okay. And it can stay okay. But from when you look at this volume profile, you can see clearly the sellers are selling their junk bonds there. All right, on to TLT. So no change on the price and annual momentum. Ultra short term, bullish across the board. Intermediate, long term, bearish across the board. Those will take longer. But when you're looking something that was, remember, all red not long ago, this is a positive sign. And down here, 1 month momentum's green. 3 and 6 month are negative and rising. 9 is, you're never going to get all of these in the early stages of bond, but 12 is one of the things that I really get interested in, because when the 12 month is negative and rising, which is going to be for the next several months, now you can find bottoms near where 12-month momentum goes from red to gold. And it's been that way for, I think, at least a week now, if not 2. And let's look at TLT. So what do you see here? Potential bottoming pattern. And in the bigger story, perhaps, if we zoom out in context, is you've got a massive double bottom from back in 2019 to here. Well, that's kind of interesting. So let's go back to the 1-year chart, put the volume profile back on, and what do you see? It's fighting the 50-day moving average and winning that battle. Still think you go a little more sideways here on price, but it's building up some volume here. And I want you to see this because bottoming pattern, how do you know that this is unlikely to shoot down and break the all-time low or even revisit it? Because it's putting in some volume here. And if we go and look at, say, the 90-day chart, where all this trading is going on, look at where this heavy volume is at. It's right here around 139.20. I'm trying to read that. It's pretty hard to see. But right there in the low 139s is you have a whole bunch of trading volume, which gives you the idea that this was a bear trap. And we see it looks like a bear trap. So how do you know when you see these bottoming patterns? Well, look at what the volume's telling you. It's telling you there's support at this price level. Now, if we zoom back out to the 1 year, what do you see in terms of the move higher when it does make that move? Well, there's not a lot of resistance in terms of volume between 140 and 152. And in fact, there's really not a whole lot until you get almost into the 58 to 160 range. There's like a speed bump at 152. If this thing gets some momentum behind it, which it already is, and gets some price going, you can see that of all the things we've looked at that have upside potential, it's TLT. I mean, look at the trading volume there, and look at how you're building a support layer with all these shares trading hands to let you know that there's some confidence if you're looking at entering a position there. So I like that one. Now let's take a look at gold. Not much change on the short term. 1 month now is green, 3 and 6 month negative and rising. Oh, hey, it's almost looking like TLT except the 12 month. This is really something you want to see, is 12 month is positive and rising. So there's some indicators that say, hey, yeah, bonds go up, gold goes up. Of course, as many of you know who follow the macro show, it's when bonds and gold don't follow each other is where the problems lie. And what do we see with gold? It's running right into resistance here at 1800. It keeps running into sellers here at 1800. It's crossed a 50-day moving average, suggesting that rallies begin with a cross and a confirmation. Usually you want to see the 50-day rolling up. there's still a lot of sellers here at 1800. And when you go back out a little bit and you start putting this gold picture in context, what you had down here is 1687 was support, still is support. And down here was support, and then it broke up to 1800, shot higher. Now look over here, 1687, double bottom, broke through, what is this level here? 1750 was resistance, broke up into here. Now the question is, it needs to really get through 1800 desperately and then get through about 1820. If this holds out and it's rejected here at 1800 and comes back down, these buyers are going to disappear. And there goes the floor. What I'm looking for in terms of macro perspective is I want to see gold run into resistance here, which it looks like it is, go down, and why bonds go up. But we'll see how that all goes. Silver given a different picture, almost completely bullish across the board, and a lot of people are still very bullish silver. So let's see what's going on with silver, and it's sitting right in between these supply zones. What is a supply zone? Well, the price range where we've seen sellers, and where have we seen sellers? Between high 26 and high 27, consistently seen sellers there. And where have we seen buyers? Consistently see the 24 to almost $25 range. And so right now you can see it ran down into the buy zone, found buyers, and tagged the top range or the bottom range of the sell zone, found sellers. So it's kind of in a kind of dead man's land in terms of supply zones, right in the middle. Let's go on to the dollar. Now I did get a message from the dollar prince on Thursday. Said the chart looked pretty bullish. I'll be curious if he listens to the show, if he thinks it still looks bullish. Look at price and momentum. I mean, almost all bearish again. 1 month momentum negative and falling, 6 month negative and falling, 12-month negative and falling. Bad, bad, bad. I mean, when you get too much red down here, bad. Saving grace is 3 month momentum is positive and rising, 9 month negative and rising, but I don't put a ton of stake on the 9 month one. But what happened to the dollar? Well, the dollar prince told me draw a line between the point here and point here, and it tells you there was support, but that was broken on Friday. And so what do we think now is likely to happen to the dollar? Let's zoom in. Tells us the next destination from the dollar is a revisit of 90.40, where it's found quite a bit of support, this upward scaling trend line. Unless the dollar prince thinks I've got it drawn wrong, well, that's where I drew it, and that's where it looks to me. So 90.40, if it doesn't hold there, then you're going to make another run at 89.50. I still don't think the dollar is over. Let's take a look at UUP, and you can see it's got a heavy zone of volume at 24.40, which is going to match up with pretty much 90.50 on the trade weighted dollar symbol DXY. As always, I appreciate all of you being fans, supporting the show, and hope this is valuable to you, and we will see you on Monday for the macro show. The content of this video is provided as educational information only. It's not intended to provide investment or other advice. It's not to be construed as a recognition or solicitation by selling security, transferring instrument, or participate in any particular trading strategies. Video was prepared by Steven Van Metre, personal capacity, business express this video that do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.